for inviting me to that conference. And in that conference, I'm presenting a little bit different school of thought, which is called the Harmonic Elliott Wave theory, which is a modified and, in my opinion, better version of the classic Elliott Wave theory. And before we start, I want you to read that important disclaimer. And let's move on. So this is how my website looks like, www.castawaytrader.com. So this is where you can see my blog post, some additional explanation of this theory and examples of my analysis. And you can follow me on Twitter. First, I would like to give you a brief explanation of the wave principle, which you are most likely aware of. But from here, I will explain why basically I made that pivot from the classic Elliott wave theory to that modified version. And in the process, I will explain you what modifications were made to this theory to make it better, in my opinion. So everybody knows that the backbone of the wave analysis is that 5-wave up fractal or 5-wave down fractal. And the Elliotticians believe that every trending move up normally follows that route when we have 5 waves up. And according to the classic Elliott wave theory, waves 1, 3, and 5 are themselves structured as the same 5-wave up fractal, but of a smaller size. So in theory, it sounds great that we have that perfect 5-wave up fractal, and inside 1, 3, and 5 waves, we have small 5-wave up fractal. But everybody who actually applies that theory in practice, in real life trading, they know that unfortunately, it does not work that well in practice, because probably that beautiful idea of those 5 waves inside 5 waves, it's too perfect to work in the real life. And the people, Elliott and Proctor, who described his work, they realized that. And we saw that sometimes, for example, in wave 5, it would terminate without making the microwave 5. And after making a microwave 3, it will turn down and it will collapse. So we came up with a fancy word, truncation, and we tried to explain that imperfect completion. And this is a problem if you are a trader, because if you've been following some 5-wave up fractal for weeks or maybe for months, and you plan to short it upon its completion, sometimes it will leave you in dust. You will still be waiting, because once it turns down, you think it's a micro 4, and you still expect another push up, and it never comes. And every time you will see, analysts would expect so-called one more high or one more low, and in many, many cases, it will never come. But that was not only one problem. People who came up with the theory, they realized that not all the time those 5 waves 1, 3, and 5 would be composed of 5 microwaves. They noticed that there were cases that those waves will be structured as ABC. The initial idea was that wave 1, 3, and 5 would be composed of 5 microwaves, while corrective pullbacks in wave 2 and 4 would be ABCs. But at some point, we realized there would be more exceptions than wave 1, where all 5 waves would be composed of ABCs. So we called it another exception, and we called it the leading diagonal pattern. And the same, we noticed that the same sometimes happens to wave 5, where microwave 1, 3, and 5 would again be composed of ABCs. To give you an example of what actually the harmonic Elliott wave theory is and what the main modification, think of those two structures. For example, that ending diagonal, when every wave is composed of ABC. And this is exactly what is the modification, main modification of the harmonic Elliott wave theory. So that's the time for change. I personally used to practice the classic version of Elliott wave theory for 3 or 4 years. And then, I kept seeing that imperfect completion, and I kept seeing that instead of a microwave 5, we would not get it, and we would get that truncation. And, I would miss so many patterns until people referred me to works of a well-known trader named Ian Copsey, who came up with that modification. And he's the man who came up with that whole modified version of the Elliott Wave theory and called it the Harmonic Elliott Wave. So this is how the 5-wave up fractal looks like under the Harmonic Elliott Wave theory. You see the same 5 waves, 1, 2, 3, 4, and 5, but you can see that wave 1, 3, and 5 also have that ABC, clean ABC subdivision. The same principle, because we talk about a trending market, so it has to make higher highs and higher lows, and this is exactly what happens inside that fractal. But the good thing is that instead of 2 corrective structures in wave 2 and in wave 4, we have 2 more in subwave B of wave 3 and in subwave B of wave 5. I'm not talking about subwave B of wave 1 because it's too early to say that a new 5-wave up fractal has started. But at that point, once we get a strong 5-wave move up in subwave A, the first leg up of wave 3, and we get a shallow and flat ABC pullback of subwave B down, that becomes a favorable long setup. Another plus for us of using that fractal is that every new pullback creates a higher low, and that higher low becomes an important critical support for the whole 5-wave up fractal. Again, under the classic theory, we have to wait until wave 4 is completed to start using it as the critical support for the wave 5. And in addition, we have a specific behavior of subwave A of wave 5. Specifically, it normally stalls at the top made by wave 3, produces ABC move down, creating a bear trap, and then produces the final push higher. And later on in this lesson, in this presentation, I'll show you an example on ES Mini at the final top, in my opinion, that we got in January 2022. So the same principle again, we believe that the 5-wave up fractal is composed of impulsive waves, and it's subwave A and C of wave 1, 3, and 5, and we have corrective waves that are structured as ABC. So if to speak about corrective waves, we do not have any difference in between that modified version of the Harmonic Elliott Wave theory and the classic version of the Elliott Wave series. So we treat corrective waves in identical way. You can read more about details of that modified and better Elliott Wave theory on my blog, which you can find on medium.com. Just search for Castaway Trader. And I hope I'll be able to distribute that presentation with links, so you will be able to read those articles. I posted 3 articles that explained in details that modification, that modified version of the Elliott Wave theory. And if you want to learn even more, you can go to udemy.com. This is the largest educational platform in the world, and I offer a special price for the following 5 days with the coupon September, and you can get my professional video course for only $49.99. It will include up to 10 hours of video lessons, and you pay only once for a lifetime. Now, let's move on, and I'll show you on a real-life case so how we could apply the Harmonic Elliott Wave theory to count the huge rally that started at the beginning of 2009 and that topped, in my opinion, in January 2022. Remember, we want to see a clear ABC subdivision behind every wave, not only corrective wave, but also on the way of the waves 1, 3, and 5. So first, we start the beginning of the move. We got ABC up, that was wave 1, that topped in 2011, and we got a corrective ABC down of wave 2. And here, in the same wave as in the classic Elliott wave theory, we would apply an extension tool, which is widely available under any charting platform. And normally, subwave A of wave 3 is a weaker one, the weaker part of the rally, and it tends to top at 138.2 or 176.4% extension of wave 1. And here you can see subwave A topped in between of those. And it produced another very shallow, disappointing for bears, ABC down pullback in consolidation, and that was subwave B of wave 3. Here we can see the second leg up of wave 3. We got a strong move up that extended up to 276.4% extension of wave 1. And here we got the tricky expanding triangle. And it's very difficult to trade, and because it's composed of 5 subwaves: A down, B up, C down, D up, E down. And the trickiest part of that pullback structure is that every successive subway is actually longer than the preceding one. And the final one comes as a panic drop. We got that panic drop on pandemic news in February, March 2020, and it stopped right at 50% retracement. What's great about that that modified version of the harmonic Elliott wave theory is that not only we can use extensions of wave 1 to come up with forecast for the top of wave 3, but we can use in separation the subwave A of wave 3 and apply extensions to subwave A of wave 3, which is not what normally is used and is available for the classic wave theory. And subwave C of wave 3, the second leg up, tends to top at 138.2% extension of subwave A of wave 3. So that final thrust higher in January, February 2020 actually topped right at 138.2% extension of subwave A of wave 3. Because we deal with a little bit different type of labeling and we apply retracement fibs from the bottom of wave 2 to the top of wave 3, here we got a very clean completion of wave 4 right at 50% retracement of wave 3. Under the harmonic Elliott wave theory, we have two most common retracement ratios, which is 41.4 retracement and the classic 50% retracement. And now let's look at that typical fractal of the 5-wave up move under the harmonic Elliott wave theory, and you can see that specific part of the fractal. I pay a lot of time, I pay a lot of attention of my followers, not only to the whole fractal, 5-wave up fractal that has already played, but I try to teach how to recognize small parts of that fractal that basically helps them to better to predict what will happen next. Because when we look at 5 waves up, yes, it looks distinctive, it's easy to recognize it, but if I close that part of the screen, it would be much more difficult to recognize that 5-wave up fractal that has not completed yet. And this is a very distinctive part of that fractal. By the way, look, it looks like inverse head and shoulders. We get ABC down move, which is a corrective wave 4, and wave 5 under the harmonic Elliott wave theory is subdivided into ABC, subwave A up, followed by a pullback in subwave B down, making a higher low in comparison to that low, followed by the final push higher, which normally comes as a short squeeze, and that makes a new higher high and completes the whole structure. So what is distinctive about that pattern? The distinctive part of that pattern is that subwave A tends to make a triple top or double top with the previous top made by wave 3. And it makes it easier to recognize and it makes it easier to trade, because once it makes a triple top, we normally get a corrective ABC move down, setting a bear trap, and that bear trap would finally be followed by the final thrust, emotional thrust, that would break over the triple top and make a new higher high. And let's look actually what happened in after we made that pandemic low that was the bottom of big wave 4, and we got A up, very shallow B down, and another C up. You can see that I identified 5 microwaves inside subwave A and 5 microwaves inside subwave C. So that structure, that ABC up structure of the low made in March 2020 looks completed. Let's zoom in to a daily chart, and on a daily chart you can see that we can apply extensions to wave 1, and pretty often subwave A of wave 3 would top either at 100% extension or 138.2% extension, and in this particular case we topped at 100% extension. If we top at 100% extension in subwave A of 3, then subwave C of wave 3 should top at 176.4. And this is exactly what happened in summer of 2020. We got a quick pullback in wave 4 and another push higher. Again, there is a kind of a rule that once we top at 176.4 in wave 3, wave 5 tends to extend either to 223.6 extension or 250% extension. And look how 250% extension nailed the top made by the first leg up in subwave A. What happened next? We got a corrective A down, B up, C down structure in the same very way as we recognize corrective structure under the classic Elliott wave theory. So that was our subwave B down. As I mentioned, wave 5 under the harmonic Elliott wave theory has to be subdivided into A up, B down, and C up. Let's look at the final subwave C of wave 5 up that actually completed the whole rally that started in 2009. This is 1, 2, 3, 4, and 5, and you can see that wave 1 had ABC subdivision, wave 3 had a very clean ABC up subdivision. We got wave 4 and the final wave 5 that again had A up, B down, C up subdivision. I've already mentioned that subwave A of wave 3 is a great tool to focus not only the top of wave 3, but also the top of wave 5. You can see that subwave C of wave 3 tends to top at 138.2% extension. And as far as I know, nobody can use those types of extensions under the classic Elliott wave theory. And wave 5 topped at 176.4% extension. And we can see that it slightly overshot that level, but then broke under that level. So in my opinion, we got a very clean completion of the 5-wave up fractal that started in March 2009 and topped in January 2022. Now let's talk about what we normally expect when a 5-wave up fractal finds its top. We normally expect a large ABC move down in the same way as we normally do that under the classic Elliott wave theory. But I'm a huge fan of working with fractals because when we expect ABC down, it does not tell you much. It does not tell you much. It doesn't tell much to your subscribers. So I want them to visualize potential path of that corrective fractal. And I came up with several repeating fractals, and they became my reliable map to navigate through any corrective ABC move down or up. This is my secret path for any corrective rally. We call it 335. It's a well-known one. Again, the difference is that I try to visualize it, and I keep like a collection of previously played pullbacks. And sometimes it's very easy just to show my subscribers several previously repeated patterns, so we would better understand rather than just looking at that model. But the whole idea is that we get 3 legs, A down, B up, and C down. And the first leg is subdivided into 3 waves, A, B, C. The second leg up subdivided into 3 waves, A, B, C, while the final leg down is the strongest one. It may take more time than the first wave down, and normally it comes as a stronger decline. So normally it is subdivided into 5 waves, 1, 2, 3, 4, and 5. And just an example for you. This is an ABC move down we got in 2008, 2009. And here you can clearly recognize that same pattern. Look, we got A down, B up, C down. Moreover, look at details. We got 3 down, 3 up, and 5 down. So in my opinion, we are following the very same fractal now of the top made in January 2022. And we are somewhere here. So we are setting up a large drop in wave 3 of a larger wave C. I'll show that in a minute. Again, so we might be somewhere here. So we still either working on the wave 1, or we have just completed a wave 1 and work on the microwave 2. So as I mentioned, that was, so the first leg down in wave A has to be subdivided into 3 waves, A up, A down, B up, and C down. And now I'm going to show you the specific count of the first move down into June 2022. So this is how S&P 500 looked like. That was the top made in January 2022. And here you can easily recognize 3 waves, A, B, and C. And themselves, those 3 waves becomes only the first leg down in wave A, parenthesis A. And you can see that wave A, subwave A of that larger wave A was subdivided into smaller A, B, C moves. And the second leg down here had 5 wave down structure. Then this is the part that we have like so-called a bear market rally, a very tricky one unless you use my secret path for that rally. And I managed to correctly predict the turn down in mid-August, and this is how it looked like. Again, it had a clean ABC subdivision. We got wave A up, followed by a corrective whipsaw that had an ABC subdivision, that was wave B, and the final 5 wave up move. We could easily count 1, 2, 3, 4, and 5, and that retrace, that push up retraced around 61.8% of the preceding decline. And I believe that coming back to the fractal, that we are working on that part of the next large leg down in wave C. And I believe that we could have bottomed in a microwave 1, and we are working on A up, B down, C up. That could top somewhere around September OPEX or September FOMC meeting. And after that, a new decline in wave 3 would start, and it would go to new lower lows. Again, I would suggest that you take my video course, professional video course, and I have another course for beginners. And for only 5 days, for users of that conference, for viewers of that conference, I offer a special code, September coupon code, and you can use that coupon code to get special price, which is $49.99. And now, I don't know, maybe someone would like to ask me any questions. Hello? There is a question, what brokers do I use? I personally use TradeStation for charting, but I also trade through interactive brokers. And there is a question about a link for special rate. I think organizers of that conference would help me to distribute links, and I'll share those links, or you can email me castaway@gmail.com, and I can show you again how my website looks like. So this is the correct address, www.castawaytrader.com. Yeah, you can mail me. And as a special offer for viewers of that conference, I would offer 2 free trial weeks. I normally never offer free trial weeks for my service. I post regular updates in my chart room, which is hosted on Discord platform. And again, you can mail me on castawaytrader@gmail.com, and I'll send you a link to subscribe with a free 2-week trial. It's a great question about timing. Unfortunately, I do not have reliable tools to predict timing. I know many people try to find tools to do that. Sometimes they nail turns, sometimes they miss them. My own attempt to deal with timing is that I coded a number of proprietary indicators for TradingView, and I will share with you links for those indicators. And what they do, they try to identify several cycles, underlying cycles, and they catch moments then 4 of cycles from different time frames would top or bottom at one time. But unfortunately, I do not personally have tools, and I was not able to discover any tools that would let me say that the market is going to top on 20th of September. So why I'm referring to FOMC decision is because it's a huge catalyst, and very often market turns on those dates. So we can see by now basically what's going on here with, for example, ES mini. This is the chart which I updated before we started that conference. And we just got a 5-wave move down of the top made in mid-August. And we got 1, 2, ABC of 3, ABC of 4, and a pretty weak ABC move down that was microwave 5, and that was wave 1 down. Okay, you don't see the chart. 1 second. Yes, the coupon code is September, and I'll post links. I'll post links on my website, and you can email me castawaytrader, one word, @gmail.com. So there is a question: how do you draw lines, waves, while avoid making false waves lines? So as far as I understand, the question is whether that specific modified version of the Elliott Wave Trader would protect you from incorrect labeling of waves. Unfortunately, even that modified version from time to time would provide you with different alternative wave counts. And in those cases, it's inevitable. And in those cases, you just do not trade them. So what I normally tell to my followers and subscribers is that we normally wait when those two most probable alternative counts would point in one direction. One count, a bearish count, could expect, for example, wave C up, and another count, for example, could expect a wave 3 up. So what you would do, you would start going long because both most probable counts point in one direction, and you would expect the least possible move up. So you will stay pessimistic, and your primary scenario would remain your most pessimistic scenario. That means that most likely you will not catch the whole rally. If it goes under the bullish path, you could get wave 3, but you would sell earlier because you would bet money only on your pessimistic scenario, but it's going to be a wave C and a corrective ABC structure. And in this particular case, this is what you should understand. This is what you should acknowledge and embrace, that you're not going to make, you're not going to ride all rallies. You will miss hundreds of setups. And this is what I keep telling to my subscribers. The goal is not to catch all the moves. The goal of that work is not to catch the bottom and the top. Your goal is to make money on a daily basis. And even if the market moves 2% a day, but you were able to catch only 0.2% a day, that actually would be a great job for you. You say that you do not see the chart. I don't show the chart because I have shown my presentations, and now I just address questions people ask. So if you have any other questions, I could comment on them. Again, this is how the 5-wave up fractal under the Harmonic Elliott Wave theory looks like. And as I mentioned, the main difference between that modified version of the Elliott Wave theory and the classic version is that we have ABC subdivision in each wave. Do you have any other question, guys? I will offer September coupon for special price for all 3 courses I have. The one I showed you, the professional one, I would normally, I would recommend you to start from the course for beginners, because in the beginners course, and I offer it now but for $44.99 only, it's lifetime access. You will be able to use Udemy app, and you will be able to download all video lessons on your smartphone or tablet, and you will be able to learn even when you're offline on a plane, for example. And both courses contain around 10 hours of video lessons. And you can read reviews on Udemy, and you can go to udemy.com, UDEMI. This is the largest educational platform in the world. Just search for Harmonic Elliott Wave theory, and my course would be the best-selling course there. You asked me about red colors and blue colors. So this is my personal preference. I normally label impulsive waves up in blue color and corrective waves in red color. In my opinion, it helps people to better understand where we are. And I think it's a great usual way to show impulsive waves versus corrective waves. I'm a huge fan of like different colors. As you can see, I normally use red boxes and green boxes. And when I expect a push higher, I would normally draw a red box on my chart. And if you can go to my Twitter account, go to Twitter and look for Castaway Trader, one word, you will see my Twitter account and you will see hundreds of charts I posted there. And what I normally do, if I expect a specific path, I can draw like those lines, and you will be able to follow those lines to see what I expect. And the Harmonic Elliott Wave series, I told you, and just the classic Elliott Wave series, in my opinion, it's just a collection of fractals, a repeating patterns. And when analysts focus on counting waves, I think this is the wrong focus. I think we should focus on visuals, on the way how those fractals look like. Because if we starting to memorize those patterns, how we look like, it would make it easier for you to recognize those patterns in the real world. And those waves, those labels we use, it's just a simple way to recognize those patterns and then start to follow them. Themselves waves, labels of waves do not help us much. They only help when we know what to expect. If we know that wave 4 is supposed to be followed by an ABC move up, and subwave A would stall somewhere at the top made by wave 3, this is what turns the wave count, into a tradable setup. And I am a trader. I am not an analyst. I want to make money on my charts. And I want to be able to set a protective stop. I want to be able to set a target. And in my opinion, this is why the Harmonic Elliott Wave theory is a much better tool than the classic Elliott Wave theory, because it provides you with great working tools. It does not have so-called truncation. So until we get a higher high, I will never be able to say the 5-wave up rally just completed yesterday, even though we did not get a higher high. And just if it was only one advantage of the Harmonic Elliott Wave theory, I would have chosen that one in a heartbeat. But as I explained, it has much more advantages because you have more critical support levels. It has better, more opportunities to use projection tools, not only projections of wave 1, but also projection of subwave A of wave 3. So I got a question, does the course also get into entry money management instruction as well, or more focus on the box identification? So first of all, what is the box identification? Box identification means that you will be able to make a focus about an area where a move down can find a significant support and where you can expect a bullish reversal, and the red box would be an area where a rally can find its top and you can expect a bearish reversal. And first of all, those two are very important ingredients of any trading setup. In addition to that, yes, in the pro course, I am talking about what makes a great trading setup and how you can set targets and how you can set protective stops. And as I've mentioned, the whole 5-wave up fractal actually gives you a great tool, because every new corrective move should make a higher high. And every time we complete an ABC move down, we can use that new higher low as a critical support for the whole projected path to the point of completion. My background. So basically, I have finance background. I got my MBA from Columbia University in New York. I used to be a CEO and CFO of several companies until I retired early when I was around 40. And it was in 2014, I guess, 2013, 2014. And It's funny that my first job when I was 18 years old, I was a broker. I was a trader in one of European banks. And after 3 years, I left that area because back then we did not have any tools, we did not have any systems. I didn't have any idea what I was doing, even though I managed tens of millions of dollars. So I didn't have structure to work with. And I'm a person who would like to have, some structure, some rules. I cannot just, trade, by gut. So I left and I joined a startup, and I like as a manager, and I grew with the company until we made that company public. And then we started another company. We sold that company for $1 billion, and I got my cut. So I was able not to work anymore. And soon enough, I realized that, frankly speaking, I didn't have anything to do. So I decided to read books about the proper way of trading. So I read a lot of books. I spent thousands of hours on coding different indicators. And for all those years I spent on that, maybe 2 or 3 years, I realized that the Elliott wave theory was the best tool I could find to be able to correctly predict what market will do. And I started to use it, and I used it for 2 or 3 years until I realized it had so many flaws that I really had to find something else. And then a friend referred me to the work of Ian Copsey, at FX trader, who came up with that modification. And I read his book first time, and frankly speaking, it did not resonate with me initially. But then I decided just to come back to it. I reread it and I started to apply it. And the more I used it, the more I liked it. But I was able to find more rules and more ratios than Ian initially proposed. In my personal opinion, the main mistake what Elliott wave analysts do, they take it for granted what Proctor explained in his book. In my opinion, there are more rules that we can discover and apply in our trading. Maybe they do not share with us those rules because this is their edge. I have different approach because I used to struggle so long time and nobody helped me, and I had to learn everything by myself. So this is why I recorded those courses, not because, they make me, I don't know, $10,000 a year. That's nothing. I just want to share what I discovered. And frankly speaking, every time I record a lesson, it's kind of like a keeping a journal. It helps to myself. So I would not do that job for myself, but recording those courses helped me to collect, to make my own collection of patterns. And I noted that every new course I released actually let me make a huge step forward in my personal trading results. The special offer will be valid. So the question is, how long will special offer be valid? It will be valid for 5 days. Yes. The question is, do your video courses come with you answering questions? What I suggest to do, once you subscribe to a video course, I would give you a link to get connected to my trading chat. You would not get access to all the updates I post there for paying subscribers, but you will get a complimentary access to education part of the chart room. And you will always be able to contact me with direct messages. You can share with me your personal account, and I encourage everybody to do that, because this is the best way to learn. The best way is to try counting waves by yourself, and you can share it with me, and I will explain you where you could make mistake and what is a good count, what could work, what could not work. So this is what I personally lacked when I learned that theory, and I'm able to help you by exchanging those instant communications in my Discord chart now. I personally like intraday trading because this is my personal style. I found it's difficult for myself, to keep a position for several days. Normally, I would buy and sell during the day or 2-3 days. And I prefer to get paid by the market on a daily basis, frankly. So if I make $3,000-5,000 a day, I believe that it was a good day. But even if I don't make any money on a day, I don't pay much attention to that. And this is one of the advice I give to my followers and subscribers. When you trade, you should not focus on money. And I strongly disagree with people who recommend to keep, a ledger of your wins and losses, because it will distract you. So my main goal when I look at the chart is to recognize a pattern and play. And once I recognize a pattern and play, I can come up pretty easily with a projected path for the next move. And the most reliable focus it would be a short-term focus. And this is why I know many successful traders. And the majority of those traders would be short-term traders. So we would buy and sell within the day. Yes, we trade in much bigger positions than probably many newbie individual traders. I could open a position for $500,000, for $1 million. And this is why even when price moves in my direction for 1%, I could make $5,000-$10,000 just in 10 minutes. And this is why I do not need to wait a lot of time until I get a big gain. Those counts, the question is, are those counts manually or automatically plotted? Those counts are plotted manually. I think that at some point people would come up with artificial intelligence code that would be able to label waves. Up to now, I haven't seen any good example of such a code that would be able to do that. And I should tell you, I even have a YouTube video. I will also share it. I'll share a link where I explain that human being eyes and our brain, they are predisposed for pattern recognition. Just imagine when you go in a winter city and you see only a part of a car which is covered with snow. Your eye and your brain does not require you to see the whole car with all details. A tiny detail would let your brain correctly identify what kind of a car is covered under the sun, under the snow. And the same would work when you look at the chart. Then you train your brain to recognize parts of that 5-wave up fractal or ABC fractal. You will be able to understand what kind of a corrective or impulsive pattern is in play, and you will be able to make a correct prediction of what will happen next. And let me show you that secret path of a corrective fractal, which I use on a daily basis. So I love to trade pullbacks, and I believe this is my core expertise. And the main reason why I love to trade pullbacks is because that specific fractal is the most reliable fractal I have ever had. It is much more reliable than the 5-wave up fractal or 5-wave down fractal. And the majority of Elliott wave analysts would tell you, you need to recognize the wave 3, the heart of the rally. Yes, it's great to ride that huge rally. The problem is, it's not very clear at that point or even that point that we are going to get the second leg up of wave 3. But once we get the whole 5-wave up fractal completed, it becomes much more reliable to pay attention to that fractal. And because every 5-wave up move would be followed by an ABC move down. And in 90% of cases, any 5-wave up move would be followed by that ABC down fractal, and you just follow it step by step. And you can get many trading setups inside of that fractal. You can go long here, you can go short here, you can go long here, and you can go short here or there. So plenty of setups. When you deal with wave 3, it's much more difficult. It's much less reliable. So your win rate in attempting to trade that strong rally would be probably like 30%. When I deal with that fractal, my win rate could be 90%. Yes, from time to time, I trade options. So first of all, I focus on trading ETFs, triple ETFs like SPXL or TQQQ or SQQQ. So those are triple ETFs that provide quick returns, and at the same time we have high risks. But when I have a good reliable count and I expect a big move, I can use options on SPY or QQQ or IWM. Yes, I have two. So I have a question. What course I would recommend for day trading, swing trading, retail options, commodities, etc. Why we call that pattern a fractal? Because it's a repeating fractal, and that pattern is composed of the same fractal of smaller size. So you can see 5-wave up fractal, which becomes an integral part of the bigger 5-wave up fractal. And that fractal can be identified on a chart of any asset, any stock index, any commodity. I, for example, chart gold, silver, natural gas, and crude oil. But you can also apply it to any cryptocurrency like Bitcoin, Ethereum, or anything else. And the main reason why we have those repeating fractals is because behind every trade in a stock market or any commodity market or crypto market, there are people. And people make 90% of their decisions, even when it concerns money, based on emotions. Even those people who work for Goldman Sachs or Morgan Stanley, and they are paid millions of dollars, they make the same mistakes as you make, but they make it on a bigger scale because their decisions are impacted by emotions in the same way as your decisions. And this is why many people go long at the top of wave 3, because they cannot resist the urge or fear of missing out. And this is why personally I do not like to follow anybody else's analysis. I do not follow other people who post on Twitter. I use Twitter to post my charts, because even when you read somebody else forecast, it will be inside you. You will plant it into your brain, and like in the movie Inception, you incept that idea into your brain, and it will grow there by yourself. It will inevitably will have an impact on your own judgments and your own decisions. So if you trade trying to follow several gurus on Twitter or any other platform, my first recommendation would be to stop doing that, because you will not learn anything by doing that. At least you need to pick a couple of guys and try to stick to what we do. My other recommendation would be to follow only those guys who will be willing to share with you how we exactly do that. If we keep posting just buy and sell signals, it will not bring you anywhere, believe me. Even if we nail 9 out of 10 deals, you most likely will lose a lot of money on that last 10th deal. So you need to try to learn what they do. If you manage to find a guy who kept making money, just check out whether he would be willing to explain you in detail how he did that. You can go to YouTube. So the question is, can you provide YouTube link? I will provide YouTube link, but basically you go to YouTube and search Castaway Trader. Pretty simple. And you will find my YouTube link. So this is how it's look like. Castaway Trader, one word. You can also go to Twitter, and on the Twitter page, I have a link to my website, and on my website, you can find links to Twitter and to YouTube. Thank you so much for your time, and hope, I showed you interesting ideas how you can use that modified version of the Elliott Wave theory. Thank you.